Now, had C is treated as a partner and he would be given 1/4 share of profits, right? In that case, he would not be given any salary and commission at all. But he will receive only share in profits as 1/4 of profits. Correct or not? So, C share in profits in that case would be 2,25,000, which is firm's profits as given to us in the question, multiplied with 1/4. That is 1,12,500 and then 50 and 6,250 means 56,250. This is C share. Now question says that if as a partner whatsoever he receives exceeds the amount what otherwise he would have received as a manager, the excess amount would be borne by A. This is what is mentioned here, to be personally borne by A. It means in this excess amount being payable to C, B will not bear anything. So B says that my profit share would be 2/5 after giving to C the amount equivalent to as he was getting as a manager. So in that case, B's share in profits would be 2,25,000 total profits available minus what otherwise they give to C as a manager, only 45,000. So 225 minus 45 is 1,80,000. So B share is 2/5 of 1,80,000. Means after giving salary and commission of rupees 45,000 to C, whatsoever profit is available on that, in that A and B will be sharing profits in 3:2. So B's share would be 2/5 of it. That is 1,80,000 into 2/5 means 72,000. So B's share in profits would be 72 and A's share in profits would be the remaining one. That is 2,25,000 minus how much we have given to B is 72,000 minus how much we are giving to C is 56,250. Right? And that comes to 2,25,000 minus 72 minus 56,250 is 96,750. So A is not getting 3/5 of 1,80,000. No. 3/5 of 1,80,000 is actually 36 into 3, that is 1,08,000. I show you this here. Had C continued to be a manager, A's share in profits would have been 1,18,000 to 3/5. Like B has 1,18,000 to 2/5. The same way A also would have got 1,18,000 to 3/5, that is 1,08,000. But A is not getting 1,08,000, he is getting 96,250. So the difference of these two actually is the difference of 56,250 and 45,000. But A would be getting lesser share in profits because he committed to pay C, or he committed to contribute, or rather sacrifice the excess payable to C, being a partner versus being a manager. And that amount is 56,250 minus 45,000, that is 11,250. So this much A is sacrifice. A is sacrificing. So A sacrifices how much? 1,08,000, which otherwise he would have got, minus 96,750. And that comes to, here we have 3,250 and 8, that is 11,250, the same amount. This what I have written here is only for your understanding, guys. It is not part of the solution. Now look at it and tell me whether you have understood this or not. I hope you all have understood the question well, right?
Yes, sir. Yes.
This is the question. So earlier C was manager, and he was entitled to salary at the rate of 27,000 per annum plus commission at the rate of 10% of the profit after charging his salary and commission. So after charging his salary and commission, the profits are 180. So 10% of that is 18,000. But we were not knowing 180 nor 18,000 earlier, and that is why we found this 18,000 with this calculation. Once we found commission of A, commission of C, then we understood total amount payable to C as a manager. Now, if C is considered as a partner, which actually they have done, because from 1st April 2017 they have admitted C as a partner, they have considered C as a partner with 1 by 4 share in profits. So if C is considered as a partner, then on the profits of accounting year 2017-18, his share in profits would be 1 by 4 of 225, that is 56,250, which is in excess of 45,000 by 11,250. We clearly said earlier that if he told this to A, that if you make C as a partner, whatsoever excess share he would be getting, you entirely have to sacrifice from your pocket. I will not sacrifice anything towards C. It means B will receive, after giving salary and commission to C, whatsoever profits are available in that, B will receive 2 by 5 only, because he is not contributing anything towards C. And that amounts to 72,000. So from the profits, after subtracting B's share in profits and after subtracting C's share in profits, whatsoever profits are left, they are for A. So you'll make this kind of working note, and then you will make P&L appropriation account. Have you got this, guys?
Yes, sir.
What I have written here is only for your understanding, guys. You should not include this in solution of such questions, right? So how to prepare P&L appropriation account of such questions? Net profits are 2,25,000. Two partners capital accounts. A originally is getting 1,08,000 as I calculated here. But from this, he will transfer 11,250 towards C. So this is how he will get 96,750. B will get 72,000. C as a partner is getting, okay, I should have written it like this. Add transferred from A, 11,250. That is 56,250. This is how, guys, we will prepare P&L appropriation account. And in workings, we will show this part. This one where we have shown how we got 27,000, 18,000, and here how we have got this 96,750 and 72,000 of share of A, B, and C. Is it clear to you all, guys?
Yes, yes, sir.
Come on, have you understood this or not?
Yes, sir.
So, guys, note down this. I want you all to note down this question and the solution. Please do this fast, everyone. Guys, this question was asked by Akshita. It is of shares. Lotus Limited invited applications for issuing 80,000 equity shares of rupees 10 each at a premium of rupees 4 per share. So here we have premium of rupees 4 per share on every share. And the amount is payable as follows: on application rupees 5 per share, on allotment rupees 9 per share including premium. It means in this 9, 4 rupees is premium and 5 rupees is face value. So 5 plus 5, total 10 would be the face value. That is this one. And 4 rupees is premium. The applications were received for 1,40,000 shares, though company wanted to allot only 80,000 shares. It means there is a pro rata, means there is a case of oversubscription. Company has decided to allot all the shares on pro rata basis. Right? Money overpaid on application was adjusted towards sum due on allotment. Now Rajiv, who had applied for 1,400 shares, failed to pay the allotment money. His shares were forfeited. Later on, these forfeited shares were reissued at rupees 9 per share as fully paid up. Fully paid up means whatsoever is the face value of shares, the entire share certificate has been given to the new shareholder, that is the one to whom these forfeited shares have been reissued. It means by giving certificate of rupees 10, only rupees 9 per share have been collected. It means shares have been reissued at a discount of rupee 1 per share. We have to pass journal entries for it. Have you understood the question?
Yes, sir.
Yes, sir.
Sadul, do you have some idea of this chapter, issue of shares?
Yes, sir, I do.
Okay. So payment scheme is like this. We have face value plus securities premium, which makes net payable amount. On application, face value is rupees 5 and there is no premium, so net payable amount is rupees 5 per share. On allotment, face value is 5, premium is 4, so net payable amount is rupees 9. This is how the total amount payable for face value is 10, total amount payable for premium is 14, and total amount per share payable is rupees 14. 5 plus 9, 14. Am I clear, guys?
Yes, sir.
Yes. Yes.
This is allotment scheme. Number of shares applied, number of shares allotted, adjustment. Number of shares applied are 1,40,000 as given to us here. But number of shares allotted are only the one that company wants to issue, that is 80,000. So there is excess money of 140 minus 80, that is 60,000 shares. And what everyone has paid initially is rupees 5 of application along with the application form. It means excess money is 60,000 into 5. 60,000 is the difference in the number of shares applied and number of shares allotted. And every excess share has paid rupees 5 of application, so excess money is rupees 3 lakhs. Now, from the same 80,000 shares which the company wants to allot, in allotment we require rupees 9 per share. So, total amount on allotment that is required is 80,000 into 9, that is 7 lakh 20,000. We have excess money of 3 lakhs. So, 3 lakhs would be used to adjust allotment because allotment amount is more than the excess money. So, here we will write to be used in allotment. Now suppose excess money had been rupees 8 lakhs and on allotment we require 9 into 80,000, that is 7 lakh 20,000. And if we have excess money of 8 lakhs, then only 7 lakh 20,000 would be used in allotment and rupees 80,000 would have been paid, would have been refunded to shareholders. But this is not the case here. So now we will pass journal entries. The first entry would be of receipt of application money. So bank on debit to, they have mentioned here that the company is issuing equity shares. So in our journal entries, we have to use the term equity. So here, the first entry would be bank account debit to equity share application account, right? How much money company has received on how many shares? Akshita, on how many shares the company has received application money?
1,40,000 shares, sir.
Correct. So amount is 7 lakhs, that is 1,40,000 into 5. 5 is application money paid by all the investors who applied for 1,40,000 shares. So this is how we will have our first journal entry. The way I am writing this in brackets, you also have to follow the same in exam, guys. In second entry, we will debit equity share application account and will credit equity share capital account. Capital account is always used for the number of shares allotted, and number of shares allotted are 80,000. Face value of application money is 5, and capital account is always used for face value, guys. So number of shares allotted are 80,000 and face value of application money is rupees 5. It means 80,000 into 5, that is with 4 lakhs, we will credit equity share capital account. And excess money we would be using an allotment. So right away we will transfer this 3 lakhs to allotment. So here we will write to equity share allotment account 3 lakhs. This is how 7 lakhs have been transferred to equity share capital and equity share allotment account from application account. I hope it is clear, guys.
Yes, sir.
In the third entry, we will
Yes.
make allotment money due. For that, the entry would be equity share allotment account debit to equity share capital account. But along with allotment, we have securities premium also. So we also need to credit securities premium account. Allotment money is rupees 9 per share on 80,000 shares. So it would be 80,000 into 9 per share, that is 7 lakh 20,000. Out of which rupees 5 is face value, that is capital, and rupees 4 is securities premium. So in capital, we will have 80,000 to 5, that is rupees 4 lakhs, and 80,000 into 4, that is 7 lakh, sorry, 3 lakh 20,000 would be created to securities premium account. This is how we will have our third journal entry. In the fourth journal entry, this fourth journal entry would be for receipt of allotment money. For that, we debit bank account and credit equity share allotment account. Now, if you see in equity share allotment account, the debit amount is 7 lakh 20,000 and the credit amount is 3 lakhs. It means the net debit balance in equity share allotment account is 4 lakh 20,000. That is the net debit balance in equity share allotment account, because debit side is more than the credit side. So there is a debit balance of 720 minus 3 lakhs, that is 4 lakh 20,000, with which allotment account would be created here. Means this is the net amount that we require on allotment from all the shareholders. 720 minus 3 lakhs. How much money we require on allotment? The net amount that we require is 420. We wanted 720, but out of that 3 lakhs is already with us, which we received as excess money in along with application only. So after adjusting this 3 lakhs excess money, the net amount that we want is 4 lakh 20,000. But here one shareholder Rajiv has defaulted, who applied for 1400 shares. So we have to find how much money Rajiv has not paid actually, right? And for that, here I am making a working note. Applied versus allotted. In totality, applied versus allotted is 1 lakh 40 versus 80,000. It means applied to allotted ratio is 14 is to 8, which can further be divided by 2. So it would be 7 is to 4. Now, if we talk about Rajiv, we have been given his number of applied shares here. Rajiv who applied for 1400 shares. So we know how many shares Rajiv applied for. So below applied, we will write Rajiv's shares. That is 1400. And now we have to find how many shares Rajiv was allotted. For that, what we'll do, 1400 divided by 7 multiplied with 4. 1400 divided by 7 multiplied with 4. And that gives us 800. It means Rajiv was allotted 800 shares. He applied for 1400 shares, but he was allotted 800 shares. Now the story of Rajiv. He paid on application 1400 into 5 because application money is rupees 5 and he applied for 1400 shares. So how much he paid in totality is 7000. But required on application, how much money we required from him on application based on the number of shares allotted to him. That is 800. So we required only 4000 from Rajiv. But how much he paid? 7000. It means excess money of Rajiv that we have with us is 7 minus 4, that is 3000. This 3000 actually is part of this rupees 3 lakhs, which represent excess money paid by all the investors. Non
Sir,
allotment, yes.
so that 5 rupees is that allotment money
No,
without the
no, no, no.
paying.
It is application. This is entirely about application. I have mentioned required on application. This
Yes,
5
yes.
rupees is application money. Now we will talk about allotment from here.
Okay, sir.
So on allotment, how much we require from Rajiv? We require two amounts. One is of face value rupees 5 per share and one is of securities premium rupees 4 per share. He has been allotted 800 shares. So for face value require from him 4000 and for securities premium we require from him 800 into 4, that is 3200. Now from the required amount, that is the total amount that we require from him is 7200. 4000 of face value, 3200 is of securities premium, that is 7200. Now he failed to pay anything on allotment. This is what question says. Failed to pay the allotment money. He did not pay anything on allotment. But we already have his excess money of rupees 3000. Excess money is always first used for face value. So this 3000 we will use for face value first. And in face value only the entire excess money will get exhausted. Because face value amount we require is 4000 but excess money is 3000. It means nothing could be adjusted towards securities premium, right? So how much Rajiv has not paid, it means on allotment is 4 minus 3, 1000 of face value and 3200 minus 0, that is 3000 of 3200 of securities premium, that is 4200 in totality he has not paid, out of which 1000 is of face value and 3200 is of securities premium. We need this kind of information, we need this kind of classification because that we will use in the forfeiture entry. So this 4200 would be used in would be used as calls in arrears. So here we will debit calls in arrears account because we have not received allotment money from Rajiv. How much? 4200. That is this one. Out of total money that we wanted of 4,20,000, we have not received 4200. So the balance amount we have received. So 420 minus 4,200 is 4,15,800. This is balancing figure. Now, since Rajiv did not pay allotment money, his shares were forfeited. For that, we reversed the capital. So long we were creating capital. Here also we created, here also we created. Now on forfeiture, we will debit capital for the number of shares forfeited, and they are 800 of Rajiv. After which call we are forfeiting the shares? After allotment, we are forfeiting shares. So till allotment, total of face value is 10 only. This is how you have to find the amount to be debited to equity share capital account in forfeiture entry. It means here capital account would be debited with 800 into 10. That is with 8,000. Has he not paid any premium? Yes. So if he has not paid any premium, then for that we will debit securities premium account as well. How much premium he has not paid? 3,200. That is why we did this classification. Two calls and arrears. Total amount that he has not paid. That is created to calls and arrears, whether it is of face value or of premium. So total amount that he has not paid is 4,200, which we debited to calls and arrears in the receipt entry of allotment. Now we will credit it. And how much he has paid, not how much he has paid, but how much we have adjusted towards face value out of what he has paid. So he has paid only once application money of 7,000. After this, he did not pay anything, out of which 4,000 we adjusted for application. And in application, the entire amount of face value only. There was no premium. It means out of 7,000, we adjusted this 4,000 in face value of application and remaining 3,000 again in face value of allotment. So with this, share forfeiture account would be created. That is 7,000. That's it. We are done with this. The debit side total is 11,200. Credit side total is also 11,200. Share forfeiture account is created with the amount which we have adjusted towards face value out of the money received from the defaulting shareholder, and not the entire money that we have received from the defaulting shareholder. Right? Students do, it's a very common mistake done by students. They put the entire amount whatsoever we have received from the defaulting shareholder in share forfeiture account. Now, after this, we reissued all the shares of Rajiv at rupees 9 per share. Means rupees 9 we have collected by reissuing shares. But how we have reissued them as fully paid up? Means we have given certificate of rupees 10 per share only. Fully paid up means the total face value. So we have received rupees 9 per share on 800 shares by reissuing them, that is 7,200. But we issued share certificate of entire rupees 10, that is 800 into 10 means rupees 8,000. It means we have given discount of rupee 1 per share, and that would be debited to share forfeiture account. 800 into 1. This is discount per share. That is rupees 800. The last entry is of capital reserve. The entry is share forfeiture account debit to capital reserve account. Since all the shares have been reissued, whatsoever we forfeited, out of that all the shares have been reissued, and therefore calculation or the calculation of amount of this entry becomes very easy. You simply have to take trade balance and share forfeiture. From that you have to subtract debit balance of share forfeiture. So 7,000 minus 800, 6,200 is the amount of capital reserve. But in every question this happens. No, it's not so. When all the shares which have been forfeited are not reissued, but only some shares are reissued, then you should not do 7,000 minus 800. No. So, Akshita, we are done with this question. Or tell me if you
Yes,
have
sir.
any doubt anywhere.
Sir, in a share forfeiture account, so whatever the money that the shareholder has paid will come in share forfeiture account
No, no,
during the time of
no,
forfeiture.
no. Whatsoever we have adjusted in face value out of what we have received from the defaulting shareholder, that goes to share forfeiture. Suppose you have received 7,000 from Rajiv, but out of that, you have adjusted only 6,000 towards face value, and remaining 1,000 you have adjusted towards securities premium. Then only 6,000 will go in share forfeiture. Have you understood?
Yes, sir.
Suppose here excess amount is, let's say this amount is 8,000, but on application we require only 4,000. In that case, excess amount is how much? 4. No, okay, I make it 9. 9 minus 4, so excess amount is 5,000. But for face value of allotment, you require only 4,000. So out of this excess of 5,000, you will adjust 4,000 here, and remaining 1,000 you will adjust in premium. How
Yes,
much
sir.
you received in totality from Rajiv? 9,000. This one. Out of which, how much you adjusted in face value of application? 4,000. And how much you adjusted towards face value of allotment? 4,000. So 4 plus 4. This 8,000 only will come in share forfeiture account. Though we have received 9,000 from him and we have seized his entire amount, we have seized his entire 9,000. But in share forfeiture, we do not credit the entire amount seized. Rather, we credit that amount which we have adjusted towards the face value. Have you got me? The amount that
Yes,
you have
sir.
adjusted towards security stream, that is not credited to share forfeiture account at all. Right? So this was only for your understanding. I am removing this from here
And sir,
because
if it's given like 5 rupees on application and 3 rupees in allotment and 2 rupees on first and final call, but we're forfeiting a shareholder's shares after allotment, so then you would take only 8 rupees
where,
in
in which,
the share capital
correct,
while forfeiting
correct,
in equity share.
correct, correct. Application is rupees 5, allotment is rupees 3, first call is rupees 2. But after allotment only you are forfeiting his shares, and here you will take 800 into 8. That is 5 plus 3. You will not take the call which you have not made yet.
Yes, sir.
Right? Anything else?
Sir,
Yes, Taman.
so if the first and final call or the second final call is not yet made, we will exclude those amount and we will multiply the number of shares only with the amount which is paid.
Correct. See, whenever you are doing forfeiture entry, suppose here I have done forfeiture entry, and you are confused with the amount what amount you should take here. Like you should multiply 800 with what? What you should do, very simple. Just before this entry, see for how much amount per share you have created capital. Like here we have created capital with rupees 5 per share. Again before this we created capital rupees 5 per share. So in totality we have created capital with 10. So now here we will debit capital with 10 only. That is why I took 10 here.
We
Have you
won't
got me?
take this premium amount 4 rupees, sir.
Sorry?
We won't take the 4 rupees as the premium amount.
No, no, no. See,
That
it
won't.
is capital and premium are different. You will not take premium at all here. You will take only face value amount here, right?
Okay. Yeah. Okay, sir.
Anything else, guys? Anyone? Sadul, Anna, I hope you're understanding everything.
Yes, sir. Yes.
So, Akshita, Daman, do you want to note down anything? Any of you want to note down anything out of this?
Sir, in the allotment scheme, that 60,000 share into 5, that 5 rupees is the application amount, sir.
Correct, correct. Because excess money you receive along with application form only.
Okay, sir. So, in whatever sum it is, if they're telling us to allot the excess shares to the allotment time, we have to multiply the excess amount into the application amount only, sir.
Correct. And excess
O-
number of shares you will find with the difference of applied and allotted. So
Okay, sir.
140 minus 80 is 60,000 multiplied with application money. That gives you excess money.
Okay, sir. So, if they're telling that the excess shares has been uh, compensated with the allotment time, we won't take the allotment money. It's only the application money.
Yes, correct. Here, na? Here you are
Okay.
asking, right?
Yes, sir. Yes, sir.
Yes, we will take only application money, correct?
Okay,
We
sir.
will take only this amount. This plus in case in premium you have something that also will come here.
Okay, sir.
Yeah. But not this amount at all. No.
Okay,
That
sir.
will not come.
Because in many SEMs they have been telling that this pro rata allotment, sir. So that's why.
Yeah, so it is pro rata allotment only. Pro rata allotment means more number of shares have been applied, but lesser number of shares are being allotted. This is called pro rata,
Okay, sir.
right?
Yes, sir. Yes, sir.
Pro rata means proportionate allotment. So,
Okay, sir.
like here, investors asked for 1,40,000 shares, but they have not been allotted 40,000, 1,40,000 shares. They have been allotted lesser number of shares. Like Rajiv applied for 1,400 shares, but he was allotted only 800 shares. So this is
Yes.
called proportionate or pro rata allotment.
Okay, sir.
So that's it, guys.
I have a doubt, sir.
Yeah, yeah, Akshita.
So, if in the called up money you have security premium included, so during the forfeiture, in the credit side, where will it be shown, sir?
Where the premium is included in application.
Mm, I mean, if you can take it as it's included in application. So then you're forfeiting after allotment. So during the forfeiture entry, where will it be shown in the credit side?
The premium amount.
Yes, sir.
See, the premium which you have already received, that is not shown in forfeiture entry anywhere. We show only the premium which we have not received. This is the first thing that you should keep in mind. The premium which we have already received. Suppose here there is premium and Rajiv has paid application money fully. In fact, he has paid application money in excess. So excess money is flowing from application to allotment, as it is happening here. Excess money is flowing from application to allotment. Correct? So what's your money of premium he has paid that is not shown in forfeiture entry at all anywhere? Yeah, what's your premium he has not paid out of the asked premium from him? That only is debited here. And that premium comes with call scenarios here on the credit side. So in this 4,200, this 3,200 is included. This is the 4,200 calls in arrears. In that, if you see, premium of 3,200 is included. So premium not paid will come in call scenarios on the credit side and in securities premium on the debit side. But premium already paid will not come in this entry anywhere at all. Is it clear now?
Yes, sir.
Sure, Akshita?
Yes, sir.
Good. You attended all the classes of issue of shares, right? When I was teaching that long back, some months back. There we did many such questions, different types of questions where premium is there in application, premium is not there in application, premium is some premium paid by the defaulting shareholder, some premium not paid by the defaulting shareholder. Like here in this question, what's your premium is there? Rajiv has not paid at all. But we have earlier seen questions where the defaulting shareholder also has paid some premium.
I just got a little confused, sir.
Lesser studies create confusions, right? But anyways, I help you. See, in our classes, I explained everything about forfeiture. Okay, now let's understand this again with a question. So here we have many questions solved. Can you all see this question, guys? Example 8. I'm asking everyone.
Yes, sir.
Yes, sir.
Ahana, Sadul.
Yes. Yes, sir.
So here ABC Limited has issued 5,000 shares of rupees 10 each at a premium of rupees 4 per share. Now premium is included in all the calls at the rate of rupee 1 per share. It is included in application, allotment, first call and final call. Applications were received for 13,000 shares. And this is how in two categories pro rata allotment has been made. Those who applied for 5,000 shares, they were allotted 2,000 shares. Those who applied for 6,000 shares, they were allotted 3,000 shares. It means those who applied for 11,000 shares, they have been allotted in totality 5,000 shares. And applications for 2,000 shares have been rejected. Means their money has been refunded. Now, Ajay, who applied for 400 shares under category 1, means Ajay belongs to this category. He failed to pay anything upon the two calls. He could not pay anything on first call nor on second call. Are you getting this?
Yes, sir.
Yes.
Okay.
Yes, sir.
So this is our payment scheme. Face value plus premium, face value plus premium, face value plus premium, and face value plus premium. The total of this side, if you see, it is 10 plus 4 is equal to 14. So 10 rupees face value, 4 is premium, total payable amount, net payable amount is rupees 14. Now Ajay belongs to this category, category 1, where investors applied for 5,000 shares, but they were allotted only 2,000 shares. So excess money here is 5 minus 2, that is 3,000, multiplied with total amount payable on application, that is rupees 3 per share. So 3,000 into 3, that is 9,000 is the excess money. I hope, right guys, Taman, I hope now this doubt is clear. How we have got excess money of 9,000 here. We have taken 3,000 as difference of applied versus allotted. This is number of shares 3,000 multiplied with application money of rupees 3 per share. Taman, is it clear?
Yes, sir.
Okay. So this money we have to adjust. So in this category, we have allotted 2,000 shares. From them, after application, we require rupees 4 per share of allotment. It means how much we require again from them on allotment? 2,000 into 4, that is rupees 8,000. But we have excess money of 9,000. So 8,000 would be adjusted in allotment, because on allotment we require only 8,000, 2,000 into 4. And remaining 1,000 we would be adjusting in first call. Because question does not say that excess money can be used up to allotment only. No, question does not say anything like that. Excess money is to be utilized for allotment and calls. It is mentioned here. Means you can take excess money from application not only to allotment but also to calls. And that is what we have done here. 8,000 we are using in allotment and 1,000 we are using in first call. In first call, how much we require? We require 2,000 into 3, 6,000. Out of that, 1,000 we have already received as excess money. Clear? I'm asking guys, is it
Yes,
clear
sir.
so far?
Yes, sir.
Akshita, Sadul, Ahana.
Sir,
Yes.
Yes,
Yes,
sir.
Taman.
sir, so in which we are adjusting that that will be the amount which we will be taking.
Sorry?
If we are adjusting the excess shares in allotment, we will take the allotment rupee, and if you are adjusting it in the first call, we'll be taking the first call amount. Is it like
Cor-
that, sir?
Correct. But yeah, means 8,000 we are using in the allotment and 1,000 we are using in first call. Means this 8,000 would be adjusted in allotment, 1,000 would be adjusted in first call. Correct? This is what you are asking, right?
Sir, like in the previous sum, the excess shares, this is that is to be adjusted in the allotment time, sir. We
Yes.
took the excess shares into the application amount, and in the shares we are taking the application amount and allotment amount.
No, 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 it's not so. See, this excess money we have received where? We have received this excess money in which form? Have we received an application form or allotment form or first call or final call? I'm asking you. Why we have excess
Yes,
money?
sir.
Because those who applied for 5,000 shares, they were not knowing that they would not be allotted 5,000 shares. They assumed that they would be allotted all the shares, all the 5,000 shares. But since they were allotted lesser number of shares, that is why we have excess money. So this excess money is of application only, which we are flowing down, which we would be using in allotment as well as in first call.
Okay, sir.
Now, if you see this question, here also we had excess money of 3000. Or if you see
Yes,
this
sir.
one, here we have excess money of 3 lakhs. But why we said that it would be used only in allotment? Because in allotment we require 80,000 into 9, 7 lakh 20,000. But we have excess money of only 3 lakhs. So we have to use the entire excess money in allotment only, because for allotment also this amount is not enough. Allotment money needed is 7 lakh 20, but we have excess money of only 3 lakhs. That is why entire excess money we are using in allotment. You cannot divide excess money in allotment and first call as per your choice. No. What's your excess money you have? First, you would be using it. You would be adjusting in the immediate next call, and the next call is allotment. But here, if
Okay,
you
sir.
see, in allotment we require 2,000 to 8,000, but we have more than 8,000. That is why we are using excess money not only in allotment but also in first call. And this excess money is entirely of application only. It is coming from application only. Nothing is coming from allotment. No. After adjusting 8,000 in allotment, we still have 1,000 with us. That is why we are using this in first call. And question says that you can use the excess money not only in allotment but also in calls. If here question says that excess money is to be utilized only for allotment, then after using this 8,000 allotment, rupees 1,000 we would have refunded. We would not have used in first call. Does this make some sense and gives you clarity, more clarity, or you still have many confusions now?
Sir, that like in the first line, it is saying excess amount of 9,000, which is 3,000 shares into 3 rupees to
Yeah,
be
and
adjusted
that
in
that 3
as
rupees is of
follows.
application. This
Ah,
3
okay,
rupees is
sir.
not of allotment at all. No, this is of this
Okay,
3
sir.
rupees. Yeah.
Okay, sir. And the next line, 8,000 is from 2,000 shares of 4 rupees
No, no, see,
in allotment.
see this is the money that we want. This is not the money that we have received. This is the money that we want. On allotment, how much we want? 2,000 into 4. That is what we have mentioned here. So
Okay,
this
sir.
4 has nothing to do with this 9,000. No, do not mix it. Here we are
I
simply
thought it
showing,
what is from the allotment rupees. Okay, sir. I understood, sir.
correct. This we are showing just to make clear how we got this 8,000.
Okay, sir. Okay, sir.
Now the same thing 2,000 into 3 of first call we cannot write here because that will give 6,000. But we do not have 6,000 here with us. We are left only with 1,000. So how we have presented
Okay,
1,000 here as excess 9, out of which 8 has been used in allotment. So the remaining is 1,000.
okay,
Clear?
sir. Yes, sir. Yes, sir.
Akshita, Sadul, Mana, any doubt?
No, sir.
Yes, sir.
No.
Okay. So see what okay, one more thing guys. In case question says that you can use excess money not only in allotment but also for the calls as the case is there in this question, then the excess money that would be using in calls would be created to calls in advance account and not in share first call account. Not in the name of that call. No. After allotment, what's your excess money you are using for further calls that you have to credit to calls in advance? And that is what we have done here for this rupees 1,000. Have you got me?
Yes, sir.
Okay. Now we talk about Ajay. Ajay, who applied for 400 shares under category 1, failed to pay anything upon the 2 calls. Now, under category 1, applied to allotted is 5 is to 2. The ratio of applied to allotted is 5:2. And he has paid everything till allotment, so we do not need to worry of that. Here I have made the working note for Ajay. If you see, Ajay is here. Applied to allotted is 5:2, right? He has, as per the question, he has applied for 400 shares. So we have to first find how many shares allotted to Ajay. For that we found ratio of applied to allotted. Below applied, we wrote the number of shares given to us in the question. That is the number of shares applied by Ajay, 400. And with this information, we have got number of shares allotted to Ajay. That is 400 divided by 5 into 2. And that gives us 160. It means Ajay was allotted only 160 shares, though he applied for 400 shares. Now, guys, understand this calculation very thoroughly and mindfully, because this will clarify all your doubts about forfeiture and everything else. So Ajay applied for 400 shares. So he paid how much? 400 into 3. 3 rupees is application money per share. This one. So he paid how much? 400 into 3, that is 1200 rupees. But we wanted from him 160 into 3 because we allotted him only 160 shares. So how much we wanted from him is 480. Now this 480 we have kept aside for what? Application. Out of this 480, 2 rupees is of face value and 1 rupee is of premium. Because in application also we have premium. 2 rupees face value, 1 rupees premium, 1 rupee premium. So we need to classify here that whatever money we have adjusted of Ajay towards application, out of that, how much is of face value and how much is of premium. Because this information we will need in the forfeiture entry. So is it clear so far to you all, guys, what I have
Yes, sir.
written here? Akshata?
Yes, sir.
Now we have excess money of how much? 720 from Ajay. Again, we require from him on allotment how much? Face value 480 and premium 160. So out of the 720, we will first adjust the 720 towards face value. But on face value, we require only 480. So out of 720, we have adjusted 480 here towards face value and 160 here towards securities premium. So total amount that we have adjusted out of excess money of 720 is 640. But after that also we have excess money left of rupees 80. That is 720 minus 640. Clear? Now on first call, again we require from him 160 into 2, 320 and 160 into 1 160 of premium. Excess money first would be adjusted towards face value, and that is what we have done here. So how much more we require from him is 240, which he has not paid. 240 of face value and 160 of premium. So together we require from him 400 on first call after adjusting this rupees 80, which he has not paid. And that is why this will go in calls in arrears account. So if you go step by step and you do allocation of money received properly, you will rightly conclude the question, your solution, I mean. It is not rocket science, guys. I have done this all in steps and it is very clear and simple. We first found the excess money, then we adjusted excess money first towards face value of allotment and towards premium of allotment. After adjusting this 640, again we are left with 80 rupees of excess money that we adjusted towards face value of first call. And nothing we could adjust towards securities premium because we had only 80 rupees of excess money, but we needed rupees 320 of first call, of face value. Is it clear?
Yes, sir.
Yes, sir.
Okay, now if you see Ajay's forfeiture entry, this is since he did not pay two calls, after which his shares were forfeited, it means his shares were forfeited after final call. Till final call, total of face value is rupees 10. That is why in the forfeiture entry, we will debit share capital account with rupees 10 for the number of shares allotted to Ajay. And number of shares allotted to Ajay are 160. So we will debit share capital with 116 to 10. That is 1600. We will debit securities premium with the amount of premium which he has not paid. Which he has not paid. So which premium he has not paid? He has paid premium of obligation. He has also paid premium of allotment. So these two premium will not come in forfeiture entry at all. Yeah, he did not pay 160 premium of first call and again 160 premium of final call because premium is rupee 1 per share in all the calls. So total amount of premium that he has not paid is 160 of first call, this one, and 160 another of second call. That is 320. And that is what we have taken here, 320 in securities premium. So this 320 is the premium which he has not paid. I have mentioned this is the first call and this is the final call. It is not the premium of application and allotment which he has already paid. The same premium is included in this calls in arrears also. Here also it is included in 1040. How I will explain you that. So then we will create calls in arrears account with the total money that he has not paid. With the total money that he has not paid. So on first call, how much he has not paid? 400 rupees, 240 plus 160. That 400 has come here, and this 400 premium of 160 is already there. So this 400 has come here of first call, and final call money is how much? Final call money is rupees 4 per share, including premium of 1 per share. So 4 into 160 shares of Ajay means rupees 640 he has not paid off final call. So that 640 has come here, this one of final call. So this is how call scenarios would be created for Ajay in his forfeiture entry with 1040. In which here also 160 of premium and here also 160 of premium is included. That is, these two premiums are already included in 1040. Now, the most important part, share forfeiture account. It would be created not with the total amount paid by Ajay, but only the amount that we have adjusted towards face value. He paid on application. Out of that, we kept aside 480 rupees for application. Out of this 480, towards face value, we have adjusted only 320. So we will take 320 from here, then again 480 of face value of allotment from here. So 320 plus 480 is 800. And 80 rupees for face value of first call. This much amount we have adjusted of Ajay towards face value. 320 plus 480 that is 800 plus 80 that is 880. Although he has paid this 160 also, this 160 also. But we will not consider these amounts of premium to credit share forfeiture account. We will consider only the amount that we have adjusted towards face value. That is 320 plus 480 plus 80, 880 rupees. And that is what exactly we have done here. We have taken 880 here. There's 320 of application, 480 of allotment, and 80 of first call. So I hope guys you have also understood with which amount share forfeiture account is created.
Yes.
Sure.
Yes.
That's it, guys. Right? Sadul, Anna, Taman, any doubt
Yes,
you
sir.
have in it?
No, sir.
No,
No.
sir.
No.
Okay, so guys, you have to keep studying your other subjects, which I do not teach you. On 17th, I think you have your English exam. Keep preparing for that because for till 15th, we will have our accounts class. So you should not say that since you have your English class, you cannot attend an accounts class. You have the full day with you, except 1 or 2 hours. And that too, it is as per your wish. If you want to continue with revision classes, you can do that. I hope you have got me. Taman, Akshita, Sadul,
Yes, sir.
right? We actually were
Yes,
doing
sir.
what? We were doing dissolution of partnership firms, which I still have to complete. After that, I have planned to take up issue of shares chapter or any other chapter of your choice. After 20th or 21st, most probably I would not be available, guys. After 17th, you have your exam on, let me check it. Yeah, after 17th, it is on 24th, accounts exam. Am I correct?
Yes.
Yes, sir.
Right? So 2021st till 2021st, we will have our classes of accounts so that I could cover all the topics for which you want a revision or any doubt clarification. Right, guys? Okay.